Hello everyone. I want to talk about Bitcoin today. Technical data and Bitcoin on-chain data start to indicate that the BTC price bottom is in. The startling similarity between BTC and the previous two market cycles suggests that the bottom may be in, but on-chain data is needed for full confirmation. In a 4-year cycle, the price of Bitcoin alternated between bull and bear trends at roughly quantifiable intervals. When examining Bitcoin's long term price movement in more detail, it becomes apparent that the top and the bottom of prior cycle buildups are strikingly identical. The fact that the 2020 to 2021 cycle appears to be following the same trend is even more interesting. According to independent market researcher Horn Harris, the intervals from bottom to top and top to bottom have been constant since 2015, which is very interesting at 152 weeks and 52 weeks, respectively. Even in 2013, the bear market extended for 58 weeks, which is only 6 extra weeks compared to the previous two cycles. The similarities between Bitcoin's current rally and the one in 2019, when the main driver was pervasive negative investor sentiment, is another parallel with the previous bottom formation. The bottom from the previous cycle was reached at $3,125, and the price of Bitcoin increased by around 350% from that point. However, not every circumstance is the same. Before, as Bitcoin price started to recover, BTC Wells addresses with more than 1,000 BTC went on a buying spree. However, the absence of these buyers from the latest surge raises questions about its viability. If history is any indication, the bottom of the current cycle will be reached when Bitcoin reaches its November 2022 lows of roughly $15,500. Additionally, it would signal the start of a fresh bull market cycle, and the asset might hit a new high in October of 2025. It will be fascinating to observe whether well buyers accept Jerome Powell's Federal Reserve's view that its fighting against inflation is preventing a recession in favor of a successful soft landing. Early indications of macroeconomic improvements were seen in the job statistics and consumer price inflation figures from December. Now, let's talk about the short term. First, on the longer time frames, Bitcoin has been trading around attractive purchase levels for a while. However, due to minor selling pressure, macroeconomic headwinds, and the worry of FTX contagion, the risk of price falling to new lows was considerably high in the short term. However, on-chain indicators are beginning to move into a positive area as a result of recent increase. What you have here is the realized price metric for Bitcoin. This displays the average price paid by buyers when moving coins on chain. As you can see, only 3 times in the previous 8 years did its price go beneath its realized price. And in each one of them, a breakout above this level has signaled the conclusion of a negative trend. At this time, Bitcoin's realized price is around $20,000. So, what does this mean? Inactive buyers will be encouraged to join the rally if the price remains above this level. Spend output profit ratio is another trustworthy short term on chain indicator, which is the one you're seeing right now. Based on the cost of tokens added and withdrawn from certain addresses, it calculates the profitability of Bitcoin transactions. The indicator is used to determine if a trend is bullish or bearish. Investors increase their positions when the price is in an uptrend, which is indicated by pullbacks where this indicator value remains above 1. In a bear market, the opposite occurs. Bears control the market by selling into rallies. A strong trend reversal signal is thus generated by the metric crossing above the pivot at number 1. So, if you look at it, although the price is on the verge of turning bullish, the 7-day average transactions are now still happening at a loss right here. According to the pivot's most recent retest, the bullish reversal will take place following a good weekly close over $21,200. Another noteworthy development has involved Bitcoin miners, who were one of the biggest buyers in 2022 as pressure mounted due to the market price falling below the cost of producing Bitcoin. The days of miner capitulation, however, are probably over, which is very important. The Charles Edwards created hash ribbon indicator flashed a buy signal, indicating that the pattern of declining hash rates was coming to an end and that prices would surge above the cost of production for large to medium sized businesses. The market can anticipate that the miners will start stockpiling Bitcoin rather than having to sell the entire supply to fund operation costs until the price of Bitcoin falls below 20K in the near future. Buyers could have an easier time constructing a long-term bullish support level because to the striking similarities between Bitcoin's prior cycles and a respite from the ongoing miner sell-off. So, in conclusion, the price reverting from the SOPR pivot level around $21,200 and the absence of well buying power, however, creates some concerns that the sellers may begin to regain control soon. Buyers have on-chain support at or near the realized price of $19,715. That's all for today. Thank you and see you on the next one. Don't forget to subscribe and give me a like, please.